Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
So guys, let's keep up with our analysis of the gold market. So you can see here actually price shows more appropriate reaction on recent statistics on inflation data from the United States, and it's actually even more reliable to performance of the 10-year bonds. So if we take a look at the 10-year bonds, collapse has happened. And if on euro currency just a few minutes ago we talked about the bit lack of the normal reaction, gold market performs much better, more naturally, because of this contraction of the 10-year yields. You can see that the gold market is trying to keep going higher. And if on euro currency the question on the deep retracement still stands on the table, on the gold market we have a bit different situation. So on 4 time frame chart you could see that the market has overcome the previous top. And if you remember, yesterday we talked about the predefined range between the XOP target and resistance area, and we said if market will keep going higher and break this level up, coming close to the top, be prepared for the challenge of this top and for the upward continuation. So it was a kind of the invalidation point for a bearish scenario. So here's how it was looking like. We talked about the XOP was standing right here, and remember the lower border of this triangle. We said if market will break it up, then be prepared for a possible upward action, because yesterday we also were concerned about the possible retracement, deep retracement. And you could see that although proper reaction on the XOP still has happened right in the moment of the CPI report, so market has formed here some engulfing pattern showing some retracement down from the XOP. This retracement was very fast to be cancelled and actually reversed, which is obviously the bullish sign for the gold market. I don't know how you done with your previous position. So if you remember, yesterday we talked about what to do with the long position that we already have. So whether it's close to split or what to do. And if you have decided to close position here, don't be upset. This is not a mistake. This is just well, one of the options that you could follow depending on your personality. So it's much better to close and get the result rather than sitting on the hands, knowing when it's actually be nervous when the market's showing this side of fluctuations, especially in the lower bottom, and then make the wrong decision on the emotions. This is much worse than just close it on the predefined level, following your trading plan, and then just relax. With this upward action, nearest destination point we consider around 2710. So our Gartner's T+2, which actually mostly has been completed because the 30% retracement here has happened from this pattern, right? It easily is turning right now to the butterfly, and extension stands around 2710. Correspondingly, once market will complete this extension, some retracement will be possible, and maybe you will re-enter at the same point where you have closed the position. So this is absolutely not the subject to be upset with this current situation. Those still who are still keeping the position, that's okay. So just do not forget to manage and make your stop tight as market is moving higher, and follow the swings that market is forming. So that's actually towards what we could do. We do not consider currently any bearish positions, just because we do not have yet a background for this. No clear bearish patterns. And it means that it's a bit early to consider anything. Right now we stand focused on these potential destination points. So if suddenly market will turn down earlier and start dropping, then probably you will close on some stop that you have, and well, maybe bears will get some chance to step in if market will form something clear bearish. For example, if it will complete the butterfly. Butterfly itself is a bearish reversal pattern, It promises at least 30% retracement, so also might be used if you're scalp trader and trade on intraday charts. But for now, as a bottom line, if you don't have any longs, let's wait a bit with taking the new one and wait for some pullback. If you still have longs, you could keep them, just do not forget to manage stops. For the bears, we do not see yet anything to do.